I strongly believe that data gives us an edge in the market. If we know more than most people, we tend to be better at picking bottoms and picking tops. Now, what's also useful with data is that we can actually find long-term strategies that tend to work well. For example, there's the saying that Bitcoin is a system that moves money from the impatient people to the patient people. But it's interesting how strong that effect actually is. Have a look at this chart here. This shows us the coin days in profit and in loss. When it's in dark blue, that means profit. When it's in light blue, that means loss. Now, this is a chart of long-term holders. And what on earth are coin days? When you own one Bitcoin and you hold it over 100 days, then you have accumulated 100 coin days. Now, if you then move the Bitcoin, then you've destroyed those coin days and you start again at 1. So by looking at how many coin days are currently in profit versus in loss, we can see what's happening to the long-term holders. How many long-term holders tend to not be in profit? And again, this chart shows us that even during a massive bear market, right? When Bitcoin, for example, went from above $1,000 to below $200, that still then most coin days of the long-term holders are in profit. Yes, of course, some are in losses, but the majority still stays in profit. In other words, this 80% bear market isn't really that much of a deal if you bought beforehand, of course. So if you simply just hold for long enough. And it seems like the degree to how much the long-term holders get in losses, to how much those coin days are not in profit, is quite stable over time. And right now, of course, we are close to the all-time high, so there isn't much loss. But still, if you're only holding for long enough, you should be in profit. And if you're holding for more than one cycle, so more than 4 to 5 years, you should be, in general, making money. And so we can see, on the other hand, how the short-term holder movements are much more erratic. This shows the coin days destroyed over the last 90 days for the short-term holders. Now, this is still an interesting metric, but have a look at how much this is fluctuating. A lot of short-term holder coin days destroyed during the COVID crash. A lot of short-term holder coin days destroyed when Bitcoin was at around 40K. Very few coin days destroyed when we went sideways for a few months. And it appears as if the short-term holders aren't necessarily buying when it's a good opportunity always to buy. They tend to be panic selling at the bottoms. Now, the long-term holder 90-day coin days destroyed looks a bit more useful, right? It looks like the long-term holders tend to sell into a rally. So when Bitcoin price goes up, then the long-term holders tend to offload.
To get the full length video, feel free to simply subscribe over here. Then you get it recommended by the algorithm.